Welcome to Digital Currents, brought to you by Morgan Creek Digital. I'm Xavier Segura. Each episode, we spotlight the topics and people changing the tech industry with a focus on AI, blockchain, chips, and big data. Thanks for listening, and please make sure to subscribe if you like what you hear. And remember, stay current.
Mark, happy Friday. I feel like it's a big one that we've been building up for a long time, and I don't just mean digital currents. How are you doing?
No, look, happy Friday, and it's one of the biggest weeks in the history of Morgan Creek Digital. So digital currents and part of that. So we'll talk about that. Exciting week on many fronts. Now, you know, we're not quite coordinated today. We got blue-ish. Actually, you know, we're prepped for college football. You got your Florida Gators color. I got my Wednesday Fighting Irish colors back in action this week. So a quick reveal just to set the stage for why this was such a big week. So, you know, Bitcoin orange pants, great, but the original blockchain Bitcoin blockchain socks, the Genesis block, you know, the chancer on the brink of the second bailout for banks. And why is that important? Well, I'm wearing them in honor of Figure Technologies and Mike Cagney, which went public yesterday. That was one of our, I'm not sure it was our first, but it was one of our first investments. It's one of the investments that brought us together as partners. And it's an amazing story of, you know, someone who's been around a long time. I mean, I've known Mike for 30 plus years from his days as a hedge fund manager, then as the founder of one of the most innovative fintech companies, SoFi, and we've had him on the show. He's an amazing leader. And he has this clear-eyed vision that basically outlines why blockchain is important and what blockchains do and how they will revolutionize financial services. And, you know, the first time kind of I heard that is kind of a funny story. So I was out in San Francisco and I didn't have it on the schedule, but I kind of bumped into Mike and he said, hey, come up and let me tell you what we're up to. And I sat down in the office, and they had a little office. It was him and June and his wife, and they were talking about building Provenance blockchain, and my eyes just started getting big, and this is really big. So it was funny. You know, one of our partners at the time, Pomp, was running around town on the other side. We were kind of, you know, dividing and conquering, doing meetings that day, and I called him. I said, "You got to come over here and meet this guy, and hear the story." And, you know, the rest is kind of history in the sense that, you know, he walked in and an hour later was like, oh my gosh, this is a must do. So, you know, what is Figure Technologies? They're a business that enables the tokenization of real world assets. They've created a blockchain, a foundational blockchain for becoming really the rails of the future financial system and provenance. So lots of things to talk about, but it's super exciting. You know, that initial investment we made has crescendoed here with the IPO. We're pretty happy about that. And we've made multiple follow-on investments as well. So
I'll probably double tap on that, Mark, because, you know, if these walls could talk, right, as far as where the stories are about. And Mark, I second guessed myself this morning because I came on a late flight. I was going to go with the darker polo, and then it would have been an identical match. But I was like, let me go with the lighter blue. Although, you know, our Wolverines, they got shellacked in Norman, Oklahoma. Not an easy place to play, but great fans. And so, you know, as we kind of look at Figure specifically, Mark, I mean, that kind of started it for me in particular. As you know, I was over at Big Red at Oracle, finishing up business school at Columbia, and I would moonlight as a VC. I would sneak out at my lunch hour and just see what was happening in the tech scene, because I knew in the end, big tech was something that was moving at a glacial pace And to really get out in front of the innovation, you need to be in the capital allocating seat, and you need to understand what the trends were. So that was very obviously blockchain and AI. I just kind of like yourself in the Eureka, California moment. Once you see it, you can't unsee it, right? And so you then have to try and find the best companies that you could. And, I love your quote as well, Mark, the Thomas Edison one about, luck. It's like, I find the harder I work, the luckier I get. And we were just meeting with company after company after company, lunch hour, from 6 to midnight every day for weeks and weeks and weeks. And eventually, through some introductions, we were able to meet Mike Cagney at Figure. And immediately it stood apart just even from his command of blockchain, but then how he could make and articulate that vision towards a financial system that wasn't upending all of financial services, right? Which is kind of a very slippery slope in 2018. You always heard kind of two types of companies, the cannabis and the crypto, and they would be in the same fund. And it was like,
absolutely. Well, but to your point, X, it's such good. There are so many people, and part of it's maybe the libertarian roots of Bitcoin and blockchain and this idea that, we have to burn it all down.
right.
You have to torch the old system. Like, well, no. Basically, we're improving the system just like any system, right? I mean, transportation by horse and buggy was perfectly acceptable. It was better than walking. But the automobile and trains and ultimately airplanes were better forms. You couldn't have done a meeting in Texas yesterday and be recording this show with me today if you had to take the covered wagon or the horse and buggy.
Exactly. No covered wagons, at least for a little while, until I recover from that beatdown in Oklahoma from Michigan. But yes, I much prefer planes. And to that point,
It's it's so interesting how, again, part of the reason, we actually got involved with Figure is, Mike and I we're old guys. And I actually refer to a whole handful of us because, Dan Moorhead wrote a great piece yesterday about this, and Mike Novogratz has been just crushing it at Galaxy. Yep. And we're kind of I've proclaimed this as the OMGs, the old macro guys. And why that's important is we all came out of this world of macro investing and hedge fund investing, and we understood financial services and financial systems. And then we also, because just we're around for a long time, to your point, had that exposure to tech and innovation. And I've been super lucky my whole life. I've been able to be in a role where I could allocate capital to really great investors in early stage tech. I started in the 90s and followed through. And so if you do any of that, you get exposure to and you see technological innovation. And when that innovation starts to take hold, you can see how it improves things. And there's collateral damage. Don't get me wrong. I mean, companies go away, and there are a lot of mom and pop shops that don't like Jeff Bezos very much. My life's a little bit better, arguably, because of Amazon, and that and Zoom, great example, right? I mean,
although my life, because of Amazon, Mark, maybe this happens in your household, but when it's recycling day, that's kind of my nadir in the week, because all the boxes from Amazon, they have to be prepped. They have to be,
that's right.
And there's one Segura in the household that has the burden to bring that out. They are on this podcast. So that is the one knock I'll have from Amazon.
That's fair. That is fair. And, it's definitely, look, it's definitely a new job, function, which is what happens in every innovation cycle. And that's one of the things I love about tech, right? People are always afraid of tech. Oh, it's gonna kill all these jobs. AI is gonna kill all these jobs, or innovation, or the assembly line is gonna kill all the manufacturing jobs. Yeah, it does kill certain jobs,
Sure.
but it creates more jobs, right? We have more jobs today than any time in human history, and we'll have more jobs tomorrow. The jobs change, and how you utilize tools changes. But what's exciting to me about Figure and coming public and getting to that pinnacle, and for everybody who had faith in Mike and the team, but it's also really good for all of the aspiring
Absolutely.
tech companies that now can see a path
Right.
to liquidity and a path to acceptability. Like you say, back when it was cannabis and crypto and, oh, you're the bad guy, you can't get a bank account and you can't be part of normal society because we, the incumbents, don't like you. Well, now you lit up Wall Street with Figure, and now today Gemini gets their
Right.
turn, another company we'll talk about.
Sure.
And iconoclastically, if that's a word, these events, these movements are incredibly powerful and incredibly beneficial as I call it, it's the analogs, right? In every system, you need analogs, people who've had success at doing something that inspire you,
Absolutely.
right? To go do that. Like if everyone that left a big company like IBM to start a new company failed, you'd be trepidatious as a really smart young engineer to go start a new company, right? Because, and there was a time, back around John D. Rockefeller's time, where if you competed against John D. and the other robber barons, not oligarchs, but robber barons, they made your life kind of miserable. So there was less incentive to do that. But as we modernized and as we industrialized and as we financialized, now there are these big successful outcomes. Well, one total non sequitur, but it's interesting because you're an Oracle guy and Oracle had an unbelievable week, and it's a great stat. Larry, everyone sees the Warren Buffett thing about he made half his net worth after age 65 or whatever. Larry Ellison made 40% of his net worth after age 80. 81 years old, although he looked pretty damn good.
Yeah. Life in the Hawaiian Islands has been kind to him as during COVID. I'm sure you saw that crazy story, Mark, where he bought a Hawaiian island, and there's a finite quantity of those. It's certainly in our lifetime they will continue over time, but that's a pretty crazy stat because also with Larry, the percentage he was able to hold on the company over time was also very atypical.
It's unbelievable.
It's
unbelievable.
So valuable. I just hope he continues being the University of Michigan's benefactor, as he's been a huge booster for us, which is nice to level the playing field over time. I'm sure you see that as well, Mark. Over at Notre Dame, we can finally give the players their due. We can compete with the boys in the SEC. But to your point about having this idea of connectivity and standing on the shoulders of giants. I always loved my airplane movies. I was late to the party. I'll say I saw Oppenheimer. I'm not okay because it was a very grim movie, although I love Christopher Nolan, Hans Zimmer, all that stuff was set up well. But, to kind of parlay that in what we're seeing in today's markets, you had to have somebody who had the innovation, right? So I was clearly Satoshi. I was able to see something. But then you had somebody to actually do something about that. So that was Oppenheimer, or that was Brian Armstrong, the CEO that we backed in kind of the first exit in 2021. And in our podcast over the summer where we said, is 2025 the new 2021? And we looked at the exit volume and all the activity, we're positing that, okay, we're not in the ZERP environment, so we're a little bit more fundamentally sound for the embrace of this kind of technology because we don't have this, QE that's driving everybody to do stock buybacks and disincentivize behavior to actually create financial innovation. So we're really left with, is the technology good? And we have to continue building that. So, when we're seeing things like Figure, it was also a masterclass, Mark, in the element of telling stories and in properly having product marketing. Because all throughout Figure's life cycle, it was about one thing, customer ease of use. You go on their website, I can get a cheap loan quicker than an incumbent, and I save a third on origination. That's enough to get business and made them the largest non-bank lender for HELOCs in the country. And then as the secret sauce is kind of being broken apart, as it must when your company goes to IPO, it's like, well, this is a blockchain company. And that doesn't frighten me anymore because we've had companies go public. We have had Circle. People have recognized that this is not a, criminal enterprise, but merely a new type of technology that is improving people's lives. And so, they had a very strong day. They initially, shares closed in the 30s, 24% pop over the 25 buck IPO, and they raised $787 million bucks, and that was very, very closely watched. And at one point, they were up 44%. And so, we'll have a teaser preview at the end of the show where we look deeper at their stock chart for that.
Well, and to the point next, look, an amazing outcome, amazing day. I mean, think about that. Think about a company, right? A digital asset company raising $700+ million.
Right.
That's an amazing feat when you think about, from a standing start and to have a, $6+ billion market cap is a pretty extraordinary feat. And, I go back to when we first made the investment, there was a bunch of commentary about, why is this Morgan Creek? It's never, they're not a venture capital fund. This is their first fund. It's a little tiny $40 million fund or $41 million fund. How are they co-leading figures, Series B? And I'm like, well, I love the story. Mike's like, matter of fact, it's like, well, look, it could have had anybody in Silicon Valley. There are lots of firms that would have given us money, but I already had some great investors in Silicon Valley. And if I took another one, I get the same relationships, the same ideas, the same expertise. I wanted someone who wasn't a tech guy. I'm definitely not a tech guy. Mark's a financial services guy. Hey, East Coast instead of West Coast. So some, diversity of thought. It's kind of like the old Sir John Templeton. Why'd you move down to the Bahamas? Well, because I didn't want to be around everyone else talking about the same ideas. I wanted to be a place where I could independently think, and Chapel Hill certainly does that for us. But I think it was interesting in that, we have, I think, added value. We had, multiple people on the team has been board members. Our other partner is currently a board member. And I think that it's the ability to support great founders is our job, right? We're not the ones, I talk about this all the time. There are certainly venture firms that sit around thinking big thoughts, whiteboarding and trying to, figure out the future and get ahead of it. And that's never been us, right? We are actually, I think, pretty decent at understanding kind of big tech trends, but more importantly, finding great builders. Right? Through our network, through our relationships, and through just, the experience of having to get to know really. And I can't relay the power of the experience properly on this venue. Yeah. But if you sat in, because you did it, I did it, Sachin did it, Pomp did, all these people that sat in the room with Mike.
Right.
And you've seen post after post this week talking about this, that when you're around this guy, you want to follow, right? I mean, great leaders inspire followership. They inspire support. And you can see it in lots of great leaders and great companies. And it's a privilege, one, to have the opportunity to, put your capital alongside great leaders.
Yeah. It was incredible masterclass as well in a proper fundraise. And I think what went wrong with a lot of, and I'll give us some credit here, Mark, as is my obligation when I try to call things in between the lines. So it was not a obvious time to fundraise in 2017, 2018, when you had the wake of the ICO boom and bust. So a lot of disincentive behaviors about what was happening with valuations. So you either had things were crazy high that eventually cratered, or you have folks that said, I'm not going to touch the crypto cannabis stuff, right? So you had this kind of vacuum. And then, of course, to Mike's credit, I think he's always run a very good business fundamentally, and then also from the soundness of not getting too out in front of his skis. And we saw this time after time in what we're trying to unravel from the graveyard of startup valuations in Web3, that they were just too high. They weren't based on the fundamentals, which is the exact opposite of what Cagney built, because that company is all about fundamentals. How many loans did you originate? How quickly are you originating those loans? How quickly are you getting them off your book? And ultimately, how are you kind of growing with the overall space? They eventually became the market leader. And so when they were looking at other VCs, Silicon Valley, Sand Hill Road is littered off of the fintech graveyards of companies like Synapse and Tally and Solid that basically had these very high valuations that they could not justify. And if I'm one of those VCs, if we covered on the stat, which I think is crazy, you had around 50% going to, a handful of firms, and 75% of the VC dollars raised was to 12 firms. So what when there's a bad valuation? Well, they put good money after bad to try to buy time so that these companies can turn it around, which is not what you want as a founder. You want somebody who can really help grow with you and kind of have some of those kind of more sound measuring sticks as far as, okay, let's figure out when we're going to incorporate this type of product. Because anybody who's spoken to Mike, he is no shortage of creating different products. But in terms of figuring out what is going to drive revenue, what is going to create the focus area, it definitely is success because of blockchain, but it's also success in the management team and the partners that are getting chosen to do this. And I think maybe at that time, Mark, it's probably worth, to your mention, segueing into another company that we've had some success with and has had a big day today in Gemini, right? So, they had the big announcement, and to your point, could not have been more prophetic, which is once you start to see that there is potential, that there's a turn, a horizon on the edge, companies that are ready will make that jump. And so Gemini is one of those such companies, as they started, building a business built on security. And so the idea here was to just build a better exchange. As we've seen, they didn't want to, no shade to this company, but they did not want to be Binance, right? They wanted to be a US-based company regulated out of the most litigious state, well, I'd say second most litigious behind DC, in New York, in the country. And so, that led to what we're following now is just quite an outcome, right? So they've raised the IPO initially now $24 to $26 per share at a 3.1-ish billion valuation. Even NASDAQ, of all people, Mark, of all, and
yeah,
putting money into this company. So your thoughts?
No, I think that you can't have a much better endorsement of idea whose time has come than, the largest, or one of the large, maybe one of the two largest exchanges in the world, putting money, directly into this business. So NASDAQ making a $50 million investment is a huge endorsement. I think what's interesting about this, and, going public it's a big deal in lots of areas. Now it's not quite as big a deal in the US as like places like Japan. Like in Japan, they in their logos and stuff, it's like a public company. Like it's like a really big deal to be a public company. And there's lots of different reasons. And it's important in the United States too, but it's always been the pinnacle. And in our world, in the venture capital business, it's one of really two outcomes that you'll want. Either want an IPO or an M&A sale. There are other outcomes that are less good, like companies going away. But but at the end of the day, it is a yardstick for success in our world. So it's, touch wood, it's been a really, really good year for Morgan Creek Digital in that regard. We had eToro go public a little bit earlier. We got Figure, we got Gemini, and so exciting. But the Gemini deal is, I think, really interesting in that we've talked about this in the past. Many of us go through our whole career never really, getting that one big idea right. We get involved in something, we work for a business, we work for a company, we contribute and we add value and we have great lives and great careers. But it's rare that individuals or teams kind of see a big trend and get out. The Microsoft guys, they came together, the original Microsoft 11, kind of a ragtag bunch, and they came together and they built this business and it becomes this big thing. Or, whether it's the Google guys and, Larry and Sergey and there's 20 search engines. Well, we'll start another one. Well, maybe we'll reinvent how search actually works. Or maybe there's this idea of transformers and LLMs and AI. And so there's lots of big innovation. And yet most of us don't really get that involved, except the twins, right? These guys not only got it once, not only got it twice or three times, they're really on their fourth time of getting big ideas, right? They arguably, depending on which side you believe, invented social media, right? Or at least were partly involved. And now Mark got the better end of that deal, but they were certainly involved. Then they, said, well, there's this thing, Bitcoin. And if you read the book Bitcoin Billionaires, which you should read, it's a great, easy read from Ben Mesrick. They kind of got into Bitcoin early, and they were actually the first people to try to launch an ETF. But then they bought the first NFT marketplace, right? Before OpenSea, they were there. Now, OpenSea did, I would argue, a better job executing, which, teams can execute. And here they are with an exchange, and now they're going to be the second publicly listed exchange. They're also within that exchange, you give them a half turn here for going global into the perps market in Asia. And so they are a couple of guys who get together and think big thoughts and get ahead of big ideas. And they probably have good counsel and good, relationships to help them along that way. But they decided a few years ago they wanted to get public. Timing was tough in that none of us really saw how deep and dark the last bear market was going to be in 21, and it kind of shut the window for IPOs. I mean, IPOs collapsed, I think we said 99% or something like that. I mean, it was one of the deepest declines ever. And so, but they quietly and consistently, the way these guys do, they're also Olympic rowers.
That's a very important part.
The hard work and putting in the reps, but they just kept building and putting in the reps. And now the crescendo, they get to cross the finish line today and ring the bell. And yeah, so couldn't be happier for them.
Yeah, we'll be able to know a little bit more when some of the trading data comes live, but just off the cover, they were at $28 a share. They raised $425 million at a $3.3 billion valuation, 20x oversubscribed. This is really just a continuation actually of what had been this model for a broader conversation that we had. If you accept that there is a evolution coming in the shift from traditional assets to digital assets, does that mean more power for incumbents, or does that mean opportunity for new entrants? And history, is undefeated and also unforgiving in its of what happens. New entrants generally are quicker on the uptake. They have less tech debt. They have less burden to have to appease and change the way that things have been run. And the old guard tends to be a little bit more reluctant to embrace that change. Hence, they get passed, regardless of the industry that you are talking about. So now we've seen this model now get proven time and time again. And if we want to talk about exchanges, I think that model, Mark, mirrors a lot of what we see with trading equities or any other traditional financial asset. There needs to be a desirability for expertise. Just as, in our in our town, I'll give a shout out to New Jersey. Every town in New Jersey has at least, Mark, 3 different ice cream shops. And so, that means there's one that has frozen yogurt. There's one that has more of the chain, like a Baskin Robbins, Carvel type, and then there's like an independent, right? And so you have many towns next to each other. They repeat all of this pattern. And it's because we've been able to segment out the market. And that's just ice cream, right? So when it comes to financial services, the choices are abound. So the idea that we can continue growing our asset base does not mean that, okay, that's going to just mean JP Morgan's share of everybody's paycheck increases. No, what that means is the consumer now has more options, just as they do for ice cream in New Jersey, to figure out where they are going to find the best services for their financial products. And so that's why Gemini and companies like Gemini exist, because now the consumer has a choice, because fundamentally new entrants will be quicker to adapt change in technology. So we salute them.
Yeah. And look, I innovators and innovation is what makes all of our lives better and richer, and I don't mean richer in money only. I mean, but just richer in experience and giving you back time to do the stuff that really matters in life, right? The definition of progress that I love the most, you spend less time on survival.
I love it.
Right?
I love that.
And that's true. Like if we had to hunt and forage for our food, it would, be a tough day. If we had to, chop all the firewood to heat our homes every night, it would be a tough day. But we don't do that anymore. And all of these tools, and people say, well, but what value is there in trading ones and zeros and in these artificial, tickers of companies? Well, again, financial services and capital allocation and capital dynamics are part and parcel of progress. And one of the things that Figure plus Gemini, it's kind of important that they're happening back to back, is at the end of the day, this evolution of financial services revolves around this idea of going from analog to electronic to digital. And why is that important? Well, in the analog days, I mean, and this is real, like they're going to ring the bell today, a physical bell at New York Stock Exchange, this physical building that sits on the site of where there's something called the Buttonwood Tree. Now, what was the Buttonwood Tree? Well, it was literally a place where guys, and it was only guys back then because women weren't allowed, but the guys would meet to trade. And what would they trade? They would trade analog, physical stuff, right? Pieces of paper, stock certificates for pieces of paper money. And they would physically have to be next to one another and touching one another so that they could make that exchange. And there was it was fraught with peril, right? Not only are you outside, so the elements, but you're also, if you've seen the movie Gangs in New York, you had those guys, the top hats that would come steal your stuff if you weren't careful. And so it was a dangerous thing. And so they said, well, let's build a building, and then we won't have the elements and we'll be a little safer and we can have some security. But you still had to be physically present. And then somebody came up to say, well, wait a second, what if we put the physical stuff in safe storage and we have electronic codes, ones and zeros and bank account numbers for money and QSIPs for securities, and then we can just trade those? Seems like an interesting idea. So we start to computerize and we start to go electronic. Well, okay, that's all well and good, but those electronic representations still are linked to a physical analog asset. What Figure and Gemini and Coinbase and other Circle, what they are embracing is a vision of greater transparency, greater liquidity, greater progress technologically to say, I don't think we need the pieces of paper anymore. We don't need the analog. We can have this purely digital world, digital ownership, digital representation, digital transactions. It can be cheaper and faster because, again, if you think about it, if you and I have to travel to meet, to exchange goods, that's just expensive. If we can send it electronically, that's superior, but there's all of the infrastructure around still keeping those physical goods. If we can make it purely digital, it can be much better. Take the Figure loan process. Anyone who's ever done a loan knows the pain and suffering. Filling out the paper application, going to the bank, showing your ID, the back and forth and getting your tax returns. It's tough and it's painful and it's slow. And you can do that now with digital technology, not instantaneously, but, sub 5 minutes. You can be approved for a loan, you get your money in 5 days. That is a far superior process. And tokenizing assets, putting them on chain and trading digitally across all these different interrelated platforms. And, these pioneers, these first few companies to go public are pretty important and pretty exciting. And there's a wave. It's a wave, a tidal wave of companies that are coming, and that innovation wave will be very profound, and our lives will get better because of it.
No doubt about it, Mark. And it's a good way to transition into our favorite part of the show, the chart of the week. And I have a exceptional chart of the week for us to talk about. It is the long-awaited public debut of Figure and their trading of their stock, and kind of showing folks real time, what that actually looks like. And I think this is an interesting transitionary point in general for the private investor that now manages, a public transition, and kind of some of the things that we're looking at into these companies and just monitoring, right? So here I can share my screen, and we can see exactly in real time for these guys, what they're all about at this current moment in time. Let me get the right window and let me know when you can see this. And as kind of I pull that up, Mark, we've spoken about this pretty extensively, but the idea is that, none of this would have even been possible without a changing of opinion about the investment grade ability of crypto as an asset class, and all of the regulatory wins that we've experienced over the last 12 months, which have really set the playing field ready for companies such as Figure to take that leap into the great unknown. And I think also what this highlights to us is kind of what you want to see, at least in the early stages, right? Where you do not get a second chance at a first impression. And at the same time, as an investor, you are not looking to sell always on day one, nor can you. So this is an idea of, what the market needs to show is acceptance of the initial idea. And
it may be one of those things where the uncertainty never goes away, because there are people, despite all the evidence, they just don't believe it. And the one I use all the time is Amazon. Like, Amazon's been around now 29 years. Wow. Okay? 29 years. It's up a lot over 29 years. Like a serious a lot. Yet every single year, every single one, including this year, it's at a double-digit drawdown. And the stat that always blows me away is on average, that drop from peak to trough is 31%. Well, meaning in theory, on paper, you lost a third of your money every year. But when was the right time to sell? Never. But very few people bought at the beginning and held to the end because that volatility shakes your resolve. And so the best investors find something they believe in and they buy the dips and accumulate a position over time and hold forever. That's what, Warren does and others like him. They just accumulate things when they go on sale. And it seems like a pretty simple idea, buying what's on sale, especially if it's something you believe in. But you have to have the conviction in the thesis and the process. Now, that doesn't mean you're always going to be right? You could have conviction in a technology or in a management team that turns out to be wrong. Take Theranos, right? There are a lot of people who had conviction that she was building this great business, and the stock went up a lot before it went to zero because there was no there. So I'm not saying everything is a fraud, but there will be along the way things that you can get, like really smart people had conviction in what she was doing, but it didn't work. And there are many examples of that over time. But what we're looking for as investors are management teams with a vision, teams with capabilities and expertise to build this digital future.
Yeah, well said, Mark. And we'll probably cut it there with the idea that, these are special days, as fund managers, great opportunities for us and our LPs to really benefit in the growth engine that venture capital can be. Seeing it right here with something like Figure, where, we're not going to give too much away, but it was not at that price when we invested. And it will, something where we've seen some growth over time. And, we are very optimistic that that more is coming as far as this embrace of Web3 and what it may promise. And we'll have to remind our listeners, as always, to rate, review, subscribe, tune in as we kind of decouple the theoretical from the practical. And so I'll also say thank you and congratulations to you, Mark, for the vision. And, looking forward to more and more of these kinds of days, and happy for the days that are just also normal as well, because that kind of gives you appreciation for, without the bitter, the sweet isn't as sweet. So you need to have all of those in our lives. So
amen. Game day is made better by all the practice days.
So we'll remind our listeners always resubscribe and to stay current.
Thank you for joining us this week on Digital Currents. Check out our links to our website and social media in the show's description box. Please make sure to subscribe if you like what you hear. And remember, stay current.
This podcast should not be construed as investment advice nor solicitation for the sale of any security, advisory, or other service. Investment themes and ideas discussed may be owned by funds managed by the host and podcast guests. Any conflicts at the time of production have been mentioned by the host but are subject to change. Listeners should consult their personal financial advisors before making any investment decisions.